This presentation is divided into 4 different parts. I'm giving you the time mark of when the parts start. Give it or take about 10 seconds, but this, if you don't want to watch the entirety of the video, you can use this to reference where you need to go. This is an overview of the cash and investments reconciliation that all audited financial statement agencies within the state of South Carolina need to be preparing and turning in with their financial statements due October 1st. This specifically is for the year 2025 with updates to it. You should receive a copy of your cash and investment reconciliation file in Excel via an email. However, if you don't, or if you want more information, you can go to the website cg.sc.gov and go to Guidance, Forms for State Agencies, GAAP Reporting, Agencies that Submit Financial Statements. And you will see here the Deposit and Investment Disclosure Template, and you will also see in a tutorial on how to do that. You'll also see for colleges and universities a financial statement spreadsheet, and that is to fill out your statement of net position sheet. For fiscal year 2025, I'm going to use Midlands Tech as an example, but this is the spreadsheet that you have. You have your directions, your signature page, your cash and investments lead, cash disclosure and investment disclosure, and then your credit risk overview. Your cash and investments lead is tying together information that is disclosed in the notes of your financial statement to the statement of net position. So within your notes of your financial statement, you're going to disclose what the fair market value is of your treasury pool cash. You're going to disclose your petty cash. You're going to disclose the book value or the recorded value of cash, and you're going to disclose your fair market value of investments. All of this will need to agree back to the statement of net position. On the cash disclosure spreadsheet, this is where your audited financial statement entity will disclose the details surrounding the actual cash that's held in a bank. So you have your book value or your carrying value of cash held by an entity. That is going to be disclosed in your note. You're going to have your bank statement value. So that is the value of cash that is actually in a bank statement. You can have the bank statement will reflect it. And then you're going to have your exposure of custodial credit risk of that value of cash that's in a bank. And if you hover over here, you can see definitions of what category A, category B, category C is. This column right here for 2025 is new. Previously, your entity did not have to report the actual value of cash in a bank, but for 2025, you will need to disclose the value of cash in a bank. And the breakout of the custodial credit risk needs to tie back to the cash value in the bank. Your investment disclosure is going to be the details of your investment makeup. This should agree to your note disclosure. The sum of your investment disclosure should agree to the sum of your fair market value of cash that's held by your entity. And of course, once you finish, the total amounts that you have detailed in all these places should agree to your statement of net position. In this section of the video, I'm going to be walking you through the treasury portion of your cash and investments. This is the 2025 folder file. For reference sake, we have financial statements and submissions for 2024. That will be a good starting point, so I can actually show you a financial statement and compare it to the reconciliation. Your entity, if it's an audited financial statement, will receive a comprehensive confirmation of cash from the Comptroller General's office. What do I mean by comprehensive confirmation of cash? It will include your Treasury pooled cash. It will include your composite reservoir balances that are held by the state treasury but managed by your entity. And it will hold any investments that your entity may have in the Treasurer's Office held local government investment pool. So this is a comprehensive confirmation that you will receive from the Comptroller General's office. It is reporting all of these amounts at fair market value. If your auditors have a question about how that fair market value has been calculated, you can go up here at the top of column I and click this plus button, and it will show you how this confirmation has been calculated. So you'll see in column C, this is all the funds that have been identified as belonging to Midlands Tech. And of course, for your agency, these funds listed will be for your agency. If you have any discrepancy, in other words, you notice a fund on here that should not belong to you or a fund that is missing, please reach out to the Comptroller General's office, specifically Catherine Kipp, and let her know so she can reissue a new confirmation. But this work is based off of research that the Comptroller General's office has done as to all the funds within the state and parse them out to who the documentation arrives at the owner. Column D, this cash by fund, your auditor or your finance staff can go and see this number in skis. If you pull a year-end report by a trial balance, and you will see this number would be reflected in skis as the total cash by fund. Now this number is not at fair market value. This is the net number, the net value of cash that has been deposited into the Treasurer's office for investment. To get to the fair market value of this investment, you have to back out the purchases and then the investments, add that on top to get to the fair market value. So you can see here in this example, we started with $9.4 million. The combination of the purchases of investments made from that $9.4 million plus the value, the fair market value of those investments that have been made by the Treasurer's office on behalf of this entity has resulted in a $171,000 unrealized loss on this pooled cash. The amount that the entity will be reporting is going to be this $9.229 million. That is the fair market value of the pooled cash. These amounts here for the purchase of investments in Treasury and the fair market value of investments in Treasury can be verified back to a statement that your entity should receive from the Treasurer's office. So in this example for Midlands Tech, if they had a balance in composite reservoir, it would most likely be listed here up top. If they had a balance of investments held in local government investment pool, it would be held at top. And this would be the sum of the fair market value of cash that is being held at the Treasurer's office. What you will do as the preparer for the reconciliation, you will select this whole balance in gray, and you will copy this amount and you will paste it into the cash and investment reconciliation. So here's 2024, but we're going to pretend this is 2025 because this section has not changed. So I have pasted into this form the items in gray. You have to paste it exactly as you received it. The Comptroller General's office, as part of the Act for Audit Procedures, will be verifying that this amount agrees exactly to what was confirmed. If you have any timing differences between what we're saying cash is at fair market value versus what your office is going to be reporting in their financial statements for Treasury pooled cash, that is fine. you will just put those timing differences here and notate them by fund. And so you can see here that after this section of the reconciliation is completed, that Midlands Tech has arrived at what they are going to report for pooled cash as $9.238 million. And what the ACFR team, Comptroller General's office, will do is verify that against your notes. So you can see here for Midlands Tech, when I pull up their financial statements, I can see the $9.238 million that's being disclosed in their note. So if you state what the Treasurer's Office cash is, it needs to agree to your note disclosure. Otherwise, your reconciliation will be returned to you. So now I'm going to be moving on to this section right here of the reconciliation, and this is cash and investments that are held outside of the Treasury, but they are reflected in the financial statements, and they are held by the entity itself. So in this section right here, there will be no amounts of cash and investments that belong in this section here. So you can see here that Midlands Tech has detailed this amount out. This amount will agree to their note disclosure. So here is the note disclosure. You can see right here that they have detailed out the $14.9 million for carrying amount of deposits with banks outside of the State Treasurer's Office. You'll also see, if I scroll down just a little bit more, they have detailed out their cash on hand. That's their petty cash. That is detailed here and here. So when you fill out these amounts and put them in, you don't need to put them in by fund. You can list them by bank account, whatever. You don't need to tell me what it's coming from, but you can put your amounts here. This total right here needs to agree to your cash disclosure. This amount that's held right here, cash held by entity, for 2025, you're going to make some further disclosures for this. So that 14,935 that's listed on your cash and investments sheet right here, this amount is the book value or carrying value of the cash. So it's got timing adjustments and whatnot. This column right here relates to this 14.9 million, but this is the value of that 14.9 million that's actually in a bank. This is also going to be reflected in your note disclosure. You see right here in this note disclosure, that is where the 15,235,000 is. I will be checking your reconciliation to make sure it agrees back to your published financial statement. So this is where that 15 million is going to be placed. Again, that is the value of the actual value in a bank, reflected in a bank account of the carrying value here. You're going to split out this 15 million according to its exposure for custodial credit risk. And again, if you just hover over the top of each category, it will explain to you what this is. When I went, and I will go and verify that you've put it in the correct category based on your description on your financial statements. Using that description, this amount, it was stated on the financial statements that it should fall into category A. So that is your cash disclosure that will agree back to your total cash investments lead. And all of those items, I'll be checking to make sure that these two spreadsheets are agreeing to each other and that these amounts are reflected in your note disclosure. So now that leads us to the fair market value investments disclosure for the reconciliation, which is this column right here. So last year for 2024, Midlands Tech reported a fair market value of investments that they are holding outside of the Treasury, so the entity itself is holding this, of $120 million. This $120 million will need to agree to the investment disclosure and it will also need to agree to the note disclosure within the financial statements. So for reference, here are the financial statements. I'm going to check and make sure, does this number that they're listing out here agree back to the reconciliation? So again, your note disclosure will need to agree back to your reconciliation. So here is the investments that have been provided by Midlands Tech. This is so that we have information that we can roll it up into our AFS consistently. This investment type is consistent for our AFS presentation. So your financial statements might not necessarily have it presented this way, but this is the way we need it translated for our AFS. So the only new thing here, as opposed to 2024, is this right here, this NAV, which is assets measured at net asset value. You can have your investments measured, their value can be measured two different ways. They can be measured at fair market value or at net asset value. And if you hover over here, I've got a description of what that is. You will disclose all your investments here for all these areas. Just roll it all together. The only place that net asset value will be different is in the fair value asset valuation. They will not, if it's an asset that's measured by NAV, it will not be in level 1, 2, or 3, but you will put it in this column here. So again, when you make your entries here, this detail needs to agree to your note disclosure, and in total it needs to agree as well to your statement of, when we add up the cash disclosure and the investment disclosure, it needs to agree back to your statement of net position. So once I finish my cash and investment reconciliation, these two amounts here need to agree. This is the detail of everything that's going to be disclosed in the notes. Summing it up, this should be the total cash investments per your statement of net position. I've got a screenshot here so you can see where that 144 million is coming from the statement of net position. I've got them highlighted here. I've added them up just to make sure, and yes, we are in agreement. So the note disclosure agrees to the statement of net position. And with that being said, this reconciliation is complete. Everything agrees. The amount that is being disclosed by fund back to the Comptroller General's internal records that's held at the State Treasury, this agrees. We have our timing adjustments. So once you place in your timing adjustments on your Treasurer's Office cash, it will agree back to the note disclosure. Then we have your cash and investments held outside of the Treasurer's Office. This will agree back likewise to your note disclosure. You add back these 4 sections, this, and this, and you come to your total amount. You look at what is on the statement of net position. You add that up, and then the note disclosure amounts and the statement of net position must agree. And you are done.